Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to go through the portfolio real quick. We didn't make a purchase, but we are going to talk about what's happening next week when it is Canadian banks' financials earnings week. Because all the banks in Canada are reporting sometime next week for their third quarter. And their third quarter? Yeah, it'll be their third quarter. And then we'll be in the last quarter for the fiscal year. And so we will go through the portfolio. We will talk about what we're looking for when it comes to these earnings and what's going on in the banking world of Canada. And then I have a couple questions that I want to answer that I get in the comment section that are popping up more and more. And so other than that, guys, we will get started here. So if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So today the portfolio closed out at $6,702.83, up $53.27, up 0.8% on the day. For the 1 week, we are up $15.19, up 0.23%. For the 1 month, we are up $312.71, up 4.89%. For the 3 months, we are up $415.86, up 6.61%. For the 1 year, we are up $1,221.46, up 22.28%. And for the all is the same thing. So to quickly go through the portfolio here, our first position is Bell Canada, ticker symbol BCE, closing out at $65.11. Here is the snapshot of the position there. And again, that is Bell Canada, ticker symbol BCE. Next position here is Bank of Montreal, ticker symbol BMO, closing out at $127.91. Here is the snapshot of the position, which shows the number of shares we own, the total value, percentage of the portfolio, today's return, and the total return, and our average price of getting in. And that is the position of Bank of Montreal, ticker symbol BMO. Next position we have here is Bank of Nova Scotia, ticker symbol BNS, closing out at $79.93. Here is the snapshot of the position here. And again, that is Bank of Nova Scotia, ticker symbol BNS. Next position we have here is Cisco Systems Inc., ticker symbol CSCO, closing out at $58.22. Here is the snapshot of the position there. And again, that is Cisco Systems Inc., ticker symbol CSCO. Next position we have here is Loblaws Co's, closing out at $88.96. Here's the snapshot of the position there. And again, that is Loblaws, ticker symbol L. Next position we have here is Manulife Financial Corporation, ticker symbol MFC, closing out at $24.93. Here is the snapshot of the position there. And again, that is Manulife Financial Corporation, ticker symbol MFC. Next position is Qualcomm, ticker symbol QCOM, closing out at $142.09. This is a fractional share that you can purchase. This is actually the position for the month of August 2021. We didn't have enough in the cash account, so we are not making a purchase this week, so we won't be updating the dividend tracker. But here is the snapshot of the position here. And again, that is Qualcomm, ticker symbol QCOM. Next position we have here is Royal Bank of Canada, ticker symbol RY, closing out at $131.72. Here is the snapshot of the position here. And again, that is Royal Bank of Canada, ticker symbol RY. I'm starting to see a trend of everything going up on these graph lines, but next position is TELUS Corporation, ticker symbol T, closing out at $29.04. Here is the snapshot of the position here. And again, that is TELUS Corporation, ticker symbol T. Next position and last position is TD, or Toronto Dominion Bank, ticker symbol TD, closing out at $86.13, up 56 cents on the day. Here is the snapshot of the position here. And again, that is Toronto Dominion Bank, ticker symbol TD. Here is what's in the cash account. And as you know, last video, we did set up a regular investment plan into the account. If you haven't seen that video, I recommend you to go check it out because there was some tidbits in there for, for savings, teaching yourself how to save or creating the habit to save, even if you're not investing. But it really helps if you are wanting to invest, but you're still doing your research. At least you're going to be prepared in that aspect. Here is the snapshot of the watch list. And yeah, that is the portfolio, guys. And so what are we going to talk about? There are a few questions I'd like to answer, but we'll answer that at the end of the video. So we are going to talk about next week, this upcoming week. It is the earnings week for all the banks. So Royal Bank of Canada, which is RBC, TD, which is Toronto Dominion Bank, Bank of Nova Scotia, Bank of Montreal, CIBC. The top 5 banks are reporting earnings. I think National Bank as well, which is also considered a Canadian bank. So what are we looking for? Because we own 4 of the 5 in this portfolio here. What I'm looking for is growth, of course, in the top line. If you don't know what top line is, I'll put up a definition here for you. Boom, top line. The top line is a reference to the gross figures reported by a company, such as sales or revenue. It is called the top line because it is displayed at the very top of a company's income statement and is reserved for the reporting of gross sales or revenue. A company that increases its revenue or sales is said to be generating top line growth. The opposite of a top line is the bottom line. So that is the definition of a top line. So what am I looking for? Oh, and also if you haven't seen that video on how to read an income statement, I'll also put that in a card up here for you to go check out. So the top line. The top line is the gross revenues, of course. What we're hoping to see is a growth, just like last quarter, in the top line, in income and so on and so forth. As some of us may know, the top line, last quarter, all banks did fantastic. They reduced their provisions in debt losses or debt write-offs or whatever like that. What we're looking for, and hopefully this is what I'm looking for, is the growth in the top line, like I've said over and over again in the span of 30 seconds. I'm looking for a dividend increase. And why am I looking for a dividend increase? We have almost gone through 2021 without any banks, with the exception of TD, increasing their dividends. And if there's something like an 11% growth in the top line, then there should be an 11% growth in dividends. And why do I say there's an exception for TD? Because TD has gotten into the pattern of increasing their dividends, increasing the dividend every single year. So they do it about annually. All the other financial banks tend to increase their dividend every other quarter. So we haven't seen that for the last 3 quarters. And that is because of pre-pandemic time, they kind of just stopped dividend growth just to see where everything was going. And now we're kind of past that. And we're starting to see the growth happen again, steady growth in the top line. As everyone knows, record numbers last quarter for almost all the banks. And if we can see like 11 or 12% growth or whatever percentage growth in the growth side of things on the top line, we should expect a dividend growth in the dividend payments that happen for investors. Now, this will not affect the payout ratio because the payout ratio should remain the same, as that's how much they pay out. But if there is a substantial growth in the top line, we should expect hopefully a growth in the dividend, because we haven't seen one all year. And usually we see them, with the exception of TD, every other quarter or every 2 quarters, they like to increase that. And we are starting to head back into a regular economy, hopefully. Now, I know job reports and other things say different, but I think with financial institutes, they do have the data to see, where the economy is, where it's heading, where people are spending their money, where people are saving their money. Okay, obviously we've seen groceries in Canada go up in price, and it's very noticeable. But and that's kind of the data they will see, because everyone's using one of their debit cards, point of sales through any of these financial institutes that we have in Canada. Okay, so that's what I am looking for earnings week for the banks, because they all will be reporting sometime next week, and we'll see what the news brings. Because if dividends increase, of course, we are a dividend channel, and we want to see some sort of increase. We want to see a nice gift to ourselves, to our retirement, to our portfolio, to invest more and more and more, and we can really take advantage of that regular investment plan by taking the dividends and reinvesting and creating compounding effects. Okay, so that's what we're looking for. The next thing I want to kind of talk about in this video is there are a few questions that came up. One of the questions is, how did I make money how did I not get hit by the pandemic last year in this portfolio? Well, I started actually building this portfolio in like September, I think, of last year. And pretty much the market was already bottomed out at that point. We were kind of back on the rise, and we were heading in the right direction. So I missed that part. So building this portfolio, I missed the hit because we didn't start building until September 2020. And we just kind of see a straight growth in that sense. But to be honest, some of my other portfolios did get hit, and it was kind of scary, but we're totally okay now. So not a big deal. The thing is, when it comes to those sort of things, I'm always looking for, in those times, it was actually my first time experiencing a market downturn like that. And so my emotions kind of got involved, and I wasn't doing what I preached. And it took a couple weeks to wrap my head around it. But at that point, I figured, I need to flood in as much dollars as I can into all my portfolios, because we talk about it again and again. When there's a downturn, we don't know how long it's going to be, but if we can flood our money in there, we will realize the gains on the uptrend. And so, and no one wants a failing economy anyways. I don't think anyone is trying to make the economy fail. We obviously want it to continue to grow, because that's what creates finances to go into our bank accounts, and our bank accounts are what determines what we buy, and of course what we eat and survive on. And so that's kind of how I answer that. I'll answer that question for you if you come back and watch this video. The next question I got was the fee regarding US securities or equities, sorry. So I got a question on if I minded the 1.5% fee on US stocks I'm buying and selling. Well, first of all, I'm probably not going to sell. The only time I'll sell a US stock is maybe if they cut the dividend, because that's just, it's just not worth it. So the 1.5%, if we take that, and let's take Qualcomm for example, it's 142 US, and we times that 1.5% for the fee, it's $2.13, okay, in US. Now, if I was to do the same trade, let's say on, I'm going to pick on CIBC's Investor's Edge, they have a flat fee of $6.95 per trade, and that's in US. So when you purchase a US security on that side of things, you also have to pay the flat fee of $6.95, which is of course more, hence the number is $6.95, more than the $2.13 that I would pay buying it on Wealthsimple Trade at 1.5%. Of course, this is in ratios, and if you're going to be buying more shares on here, and it's getting over that, that $6.95 fee, for example, with CIBC Investor's Edge, then maybe, yes, it'd probably be better to purchase it with Investor's Edge. But at this point where we're only purchasing, if we have enough in the cash account, which is over here, we don't have enough. So I'm not going to be purchasing a whole share. But if I was, I'm only buying one share at $2.13 and getting my money to work as soon as we possibly can. Okay, now I'm not selling. If I do sell, then I'll sell it all at once, and sure, I'll pay the 1.5% or whatever it is. is it 1.5? Yeah, sorry. I may have done the math wrong, but you're getting the point here. I am buying individual shares. I'm not buying bulk. I'm not buying 5, 10 shares of a company, obviously with Qualcomm, because we're only putting $100 in a week. So I'm doing the math. Just because it's 1.5% doesn't mean it's the end of the world. I'm pretty sure TD, Toronto Dominion Bank, their trading fee is like $10.95, right? And so of course it would probably make more sense to, maybe purchase it in Wealthsimple Trade. Another example is Quest Trade. It's not 1 cent per it's 1 cent per share, but there's also a disclosure in there, and I can't remember what it is, but go look. Quest Trade is not just 1 cent per share per trade. There are trading fees, and to be honest with you, if you're buying like 1 share here and there, like maybe the majority of people are just slowly building a portfolio, 1.5% ain't that bad when buying US equities, okay? Or stocks, or whatever you want to call them, whatever term you want to use. So do I mind it? No, not really. Do I mind the 15% tax that they take off the dividend? No, not really. I think most of the time when mistakes are happening is when we get greedy with the money, is when we get greedy with returns. If you're doing like day trading or swing trading or anything like that, where you're doing high volumes of trades, then maybe, yeah, it probably doesn't make sense. But I'm not doing that. We're building a dividend portfolio. We're holding it for as long as we possibly can. And that's the end of that. And so if anyone's curious on if I mind the 1.5% fee on US equities, I don't. I really don't. And it's kind of like pennies in a sense. And so yeah, everyone has the right to their opinion, and you might think differently. If you do think differently, put it down in the comment section below and try to convince me that the 1.5% fee is absolutely horrible in what way. And so you can take a look like at Qualcomm here. Sure, paying the 1.5% fee, we're still up 1.64%. It's not a big deal to me, and we are getting returns with the dividends. So, it is what it is. So hopefully you guys do enjoy the video. I hope you guys have a great weekend. And next week we will probably be purchasing a new position. But we're getting close to the end of the month, so dividends will start rolling in, and we can start doing a month-end update on that. And so have a great weekend, and we'll see you in the next one. Bye.